Last month, I was able to make over $10,000 day trading, and in this video, I'm going to be showing you guys the 5 pieces of advice I have for you if you're looking to scale up your day trading and start making more profits. Let's get straight into it. So before we go too far forward, it's definitely been a long process and a long journey to get to the point where I'm able to make over $10,000 and be consistent with my trading. As we all know, day trading is a very risky endeavor. So if you're going to move forward with day trading, be sure to take the precautions and have all your finances laid out and in order. Definitely don't be trying to day trade if you have tons of credit card debt piled up, if you have a bunch of car payments, like an expensive mortgage. You have to have all your finances in order, and that will make day trading much easier, so there's not a bunch of external stress weighing on your shoulders each and every day. So let's get into the first piece of advice I have for you guys. So the first thing you can start doing right now and applying to your trading is minimizing the amount of stocks you're watching and have a small consolidated watch list each and every day, and start focusing on 2 to 3 stocks each and every day. The 2 stocks I'm watching every single day for opportunities: Tesla and Nvidia. Personally, for me, I think they provide lots of great opportunities. The movement's really good for the most part, and the contracts move really well, extremely liquid. You can get in and out with ease, and you don't have to worry about slippage too much because both of these stocks have been split and they're not too pricey anymore to trade. But if you're still a beginner trader or your account size is still relatively small, I'd recommend looking at stocks like Apple. Again, contracts are relatively cheap. You can get like a call option for next month for about $2 to $3, or a name like AMD, which is also in the semiconductor space. It can be volatile at times, but again, the contracts aren't too expensive and you're not going to break the bank trading them like a name like Nvidia or Tesla, where contracts are moving, $2 to $3 within minutes. So it could destroy accounts depending on the account size. Far too often I see people who go into the stock market every day. They have a giant watch list, they're watching 20 different stocks, and they see one stock they have no plan for, they've never traded before, they have no idea how the option contracts move, and they're trying to trade it. Having a giant watch list of stocks or using scanners can lead to FOMO more often than not, and this is why you end up chasing stocks too often. You end up getting bad entries because you're focused on too much and your attention is too divided. Just focus on 2 stocks, learn how they move, understand how the contracts move, understand the ranges they trade in, and then the profits will start to be much more consistent, as opposed to making $2,000 one day, down $4,000 the next day, then making it all back. You just want to find that consistency in your trading, and the only way to get consistent is by trading a small list of names and keeping your attention on just those 2 names and learning and understanding how they move. The second piece of advice I have for you guys is understanding the market conditions. So jumping over to TrendSpot right here, I'm kind of building up the first point. We're looking at Nvidia here on the 30-minute time frame. So throughout this whole stretch, this is where I made majority of the money here. After earnings, which was this big red day, August 24th, you opened around $500 and just kind of started pulling back. But really this whole stretch here, when you drop from 480 down to lows of 410, Nvidia presented lots of opportunities to make money to the downside. So clearly the market conditions started to shift toward the downtrend. So I was primarily focused on trading the downside on Nvidia, and that's where most of the money was made. If you guys are trading options in particular, you're going to make the most money on your contracts when there's volatility in the market and you're getting clean and precise movement. So going on to the next point, once the downtrend began to shift back towards an uptrend, you can see the market condition, especially on Nvidia, begin to get really choppy, and the price action is really hard to read. So once I recognized that the price action began to go into sideways consolidation phase and the price action began to get really tight and really hard to trade, that's when I drastically reduced my position size and then shifted towards, as opposed to trading short day contracts, I switched to trying to build out long positions and putting more capital in swing trades, because the movement is not really going in my favor. The swings back and forth is going to kill contracts because you're not getting the volatility in one direction or the other. So you can see down here on Nvidia, back when we were trading back and forth, you went from 419.38 to 426, back down, back up. So really hard price action to trade if you're not an experienced trader, and it can be a zone where lots of traders lose money and they blow up accounts because the market conditions are not working in the favor. But going back up until recently, October 6th, you can see we held above 439, and then you're starting to get this push above 453 currently, and now you're shifting back into the uptrend market condition. So now I'm going to be focused on, for the time being, trading the upside on Nvidia. Hopefully you get some good movement here, but if you go back into something like this, like a box on Nvidia, I'm not going to be looking to trade Nvidia, and if I do, I'm going to be looking to reduce my position size drastically. Trying to recognize and understand all 3 phases of the stock market and how they're moving. You're going to be in an uptrend, a downtrend, or consolidating sideways. If you're trading options, again, you want to be focused on the clear uptrend and clear downtrends, because that's where the volatility is and that's where the money's going to be made. Yes, you can make money trading a sideways box, but you have to be really disciplined and really focus on your entries and exits. Otherwise, you'll get burned trading short day contracts and the theta is going to kill you. So number 2, understand the market conditions and the way the market's moving or the equity is moving. The third piece of advice I have for you guys is sizing up when you have high conviction or high quality setups. Now, how do you know if you have a high quality setup? That goes back to journaling. I recommend using a platform like TradeZilla, and also have all your stats, all of your statistics, and you'll know personally you have a high quality setup and setups that typically work for you in your favor. For me personally, the setup on AVGO was really great. I had high confidence in this trade that was going to work out in my favor, especially a name like AVGO. I don't trade too frequently. It gave me more confidence that the whole semiconductor space was pulling back, NASDAQ and ES were pulling back, and the whole market was in general just dropped, moving lower to the downside. So a few things I was looking at on this trade. If we look at SMH, the semiconductor ETF, so going back over to September 20th, so one level I was watching on SMH was this 145.18 level. Again, semiconductors, AVGO is a big semiconductor component. So if you have the whole ETF, composed of NVIDIA, AMD, Texas Instruments, names like that pulling back, it gives me more confidence and more conviction in the trade if you're breaking support on the ETF, semiconductors, and AVGO moving lower. So SMH was breaking below support here. Big red candle gave me more confidence in downside, so that's why I continue to hold the trade. Even though there's a slight drawdown in the position for the time being into FOMC, it was a little bit risky. But again, I really like the setup. I had high conviction. My TradeZilla stats were in my favor, so I had to add size when I saw that setup forming. Again, looking at SPY, or actually let's look at QQQ. Same thing, September 20th, which was this day right here, this big red candle. You can see you broke below these lows here at 366. You broke below 366, and you closed around 364. So again, you had multiple confluences in my favor, which gave me more conviction. Market was moving lower, semis were moving lower, and then AVGO moved lower. So I had more conviction, more confidence in the trade to hold through this, even though it could have been a risky trade if I didn't have the data backing me up and showing the probability in this trade. So you broke below everything. You can also look at SPY, for example, on this day. SPY broke below 440. Again, big gap down. Everything was in my favor. Really high quality trade in my opinion. So going back over AVGO, I added the AVGO contracts around $850. The top of this box right here. Again, you can see it pretty clearly. Top of this range, 850. Once you broke below 840 on the FOMC day, September 20th, it was pretty much smooth sailing. You gapped down some bad news from Google, which turned out to be fake. So sometimes you get lucky in the stock market. I already had high conviction in the trade. I knew if AVGO broke below 840, you were going to see some downside follow through continuation, and that's exactly what happened. So flipping over to TradeZilla here, you can see I had them at the top of this range here, 850, 856. I was only risking about $780 on this trade. So not too bad. Worked out pretty well to say the least. So AVGO opened up around $798. I instantly sold 3 contracts at $21. I bought them at $10. So, 100% return just on those 3 contracts alone. I held one runner and sold it at $17. So that led to a profit of about $3,400. Total return of 70% while only risking $780. So again, having high conviction, sizing up in trades, sizing up when the setup presents itself. Not just sizing up randomly on trades, sizing up when you get overconfident, sizing up when you know that you have an edge in the market and you know that setup is proven to work based on your data. Now, yes, the trade could have gone bad, but again, if you're looking to scale your trades and start making more profits, you're not looking to risk $10 to make $4,000. That's not realistic. Obviously, the more you scale up, the more risk you'd be putting on. So that's why I was risking almost $800, which may sound like a lot to some people. It may be more than some people's portfolios. But again, to start making bigger returns, you got to start putting more risk on in your portfolio. As my portfolio grows, this risk on the trade becomes, proportional to the amount on my account. So the $800 loss may seem like a lot to some people with $2,000, but this is still like maybe 2 to 3% of my portfolio size. So it's not going to impact me too much. I could take the same trade 30 times and still have money in my account. So you have to be scaling up when you see the setup present itself. Again, don't scale up at random times. Have data, have information. Use a platform like TradeZilla that can track this information for you, so you know when your edge is present in the market. The fourth piece of advice I have for you guys is understanding growth versus withdrawals. So this is something we covered in Discord a few weeks ago, but you need to understand whether you're trying to build an account, grow an account to make it to get to a certain point, or you're just using the stock market as a vehicle to withdraw money from and take small amounts of profits from each and every month. Problem I see with lots of new traders is they have like a $4,000 account and they're expecting to make $4,000 each month. If you really think about how much risk you have to put on to make 100% return each month. That's a ton of risk you're putting on to make that $4,000. Whereas someone with $100,000 only needs to make a 4% return on their money, and they're still making that $4,000. It's really understanding, are you using your account to just get small amounts of profit from each and every month, or are you actually trying to grow an account, be sustainable, get consistent with your account, and build for the future? So for me personally, right now I'm just focused on growth in my account. I'm not really withdrawing too much money. Kind of like I mentioned in the introduction, you need to have your finances in place. So if you're focused on just using the stock market to pay for all your bills and, you know, treat it like a lottery and a jackpot, you're probably going to end up blowing your account because you have unrealistic expectations. But if you go into the market with $10,000 and you're like, okay, I'm trying to make $1,000 a month, a 10% return, still kind of aggressive, but it's definitely possible. You have to keep your expectations realistic. Understand that making $10,000 on 10,000 accounts, not too realistic. But if you're thinking the case that I'm trying to grow this $10,000 and take it to $20,000 the next year, that's a much more realistic goal as opposed to trying to do multiple things at once, withdrawing money, growing account, balancing those two kind of things. So either have separate accounts, either have an account just for withdrawing money from the market and taking profits from the market, and having a separate account just for growth, just for growing and building your account larger and larger so you can take on more risk, extract more money from the profits relative to your portfolio size, and then building from there. Don't try to do both at the same time, growing an account and withdrawing from your account. It's going to become too confusing, too convoluted. You're probably going to impact your growth and stunt your growth, whether you believe it or not. So that's my advice on withdrawing versus growing an account. And the fifth and final piece of advice I have for you guys who are looking to start making more profits in the market is have some kind of side job, side hustle, and don't rely solely on day trading to cover your monthly expenses or cover your bills. So yes, even though day trading is going well, I do the option drops thing, I run Discord with Tyler, I still have other sources of income coming in. Especially when I was trying to get started trading back a few years ago. If you guys aren't aware, I still make music every now and then. But when I was a music producer, I always had different sources of income coming in. So I was still working my full-time job. I'm doing that full time, making like $2,000 a month. I was selling beats on the side, making $2,000. And on top of everything else, I was selling like sound kits. I was building websites for people, a couple $100s here and there. I was, doing phone calls with, producers, helping them, get their sounds together, how to, structure songs and stuff like that. So being able to have some kind of side income, if trading doesn't go well that month, or if the market's just moving sideways in consolidation phase, that you don't have to force trades and put on trades that you don't have to. So even now, yes, like I said, I'm doing option drops. I'm running this YouTube channel. Day trading is going well. Even now, with all those things coming in, I have money coming from different angles, different sources. I still work a part-time job on Friday and Saturday just to bring in like an extra like $300 a week that can pay for, my bills, my expenses. Again, I keep my expenses really low. I try to reinvest lots of money. So that helps me not have to rely on day trade and the stock market to pay for my bills because I have money coming in from other sources. If you only have one source of income and you expect day trading to pay for everything, you're going to get too aggressive in the market. If you have a bad losing day, you'll get really upset, really frustrated. You'll start getting too emotional through trading, lead to you spiraling out of control and blowing up your account. But if you have multiple sources of income, money coming in from different ways, whether it be a skill set you have, building websites, making thumbnails for people like option drops. Me and Tyler, we're always looking for people to help with different services like organic marketing on TikTok, Instagram marketing, stuff like that. There's lots of different ways to get paid out here. And that's just a few examples. You can find stuff on Fiverr. You can build accounts on Twitter and flip them, buy domains. There's so many different ways you can make money on the internet, especially in 2023. So if you don't have some kind of side hustle and you're not looking to have multiple sources of income, it's going to put lots of stress on your trading because you're always thinking about how you're going to make ends meet if you don't put on this trade right now. So if you guys learned anything from this video, found it helpful, be sure to like, comment, subscribe, and stay tuned for the next video. Thanks for watching.